The silver market is exploding higher, and today's move is unlike anything traders have seen in recent months. Normally, when silver rallies hard, there are obvious explanations behind it. Maybe the US dollar is crashing. Maybe the Federal Reserve is cutting interest rates. Maybe geopolitical tensions are easing and investors are rotating into industrial metals. But today, almost none of the traditional explanations seem to fit, and that is exactly why this rally has captured so much attention across the financial world. Right now, silver is trading around $86 an ounce, surging more than $5 in a single session. That is nearly a 7% move in one day, which is massive for a metal like silver. In fact, you would have to go all the way back to February to find silver trading at higher levels. The speed of this rally is shocking traders, because silver had been consolidating for weeks before suddenly exploding upward. What makes it even more interesting is that gold is barely moving compared to silver. Gold is higher as well, but only by a fraction of what silver gained today. That means the gold to silver ratio is collapsing rapidly, and that is one of the biggest stories developing in the precious metals market right now. For long-term precious metals investors, the gold to silver ratio is one of the most important indicators to watch. Historically, when the ratio becomes extremely high, many investors trade their gold for silver because silver tends to outperform during major commodity bull markets. Then, when the ratio falls back down, they reverse the trade and move back into gold. Right now, the ratio is falling fast, and if it drops below 50, many investors believe we could see a massive wave of trading activity as people begin swapping silver back into gold after silver's huge outperformance. This strategy has worked historically during previous bull runs, and investors are now watching closely to see whether history repeats itself once again. Another fascinating development is silver's market capitalization. Silver has now climbed back near the very top of the world's largest assets by market cap. In fact, silver recently moved ahead of some of the largest technology companies in the world, reclaiming a spot near the top rankings globally. That alone is drawing huge attention because it signals that institutional money is beginning to treat silver differently. For years, silver was often ignored compared to gold or major tech stocks, but now it is suddenly becoming one of the hottest assets on the planet. What makes today's rally even stranger is that the normal drivers behind silver's price movement are missing. Over the past several months, silver tended to rise whenever the US dollar weakened. But today, the dollar index is only slightly lower. The move in the dollar is nowhere near large enough to explain a 7% explosion in silver prices. Gold also is not moving dramatically higher, which tells traders this is not simply a traditional precious metals rally. Something else appears to be happening beneath the surface. Oil prices are also moving higher today, and that creates another unusual situation. For months, silver and oil had largely traded inversely. When oil went up, silver often struggled and vice versa, but now both assets are rising together. That could indicate a broader inflationary shift beginning to develop in global markets. Investors may be starting to position themselves for a future where industrial demand, energy costs, and monetary instability all push commodities significantly higher at the same time. Some investors initially wondered whether the Federal Reserve might secretly be preparing to cut interest rates sooner than expected. Normally, lower rates are bullish for precious metals because they weaken the dollar and reduce the opportunity cost of holding metals that do not pay interest. However, current market projections still show an overwhelming probability that rates will remain unchanged in the near term. Even looking further out into the future, markets still suggest rates are more likely to stay elevated rather than collapse lower. So once again, the standard explanation does not seem to work. Economic data released today also failed to fully explain the move. Existing home sales numbers came in slightly weaker than expected, but not dramatically so. While some analysts believe weaker economic data could support precious metals, the numbers simply were not extreme enough to justify silver exploding upward the way it did today. At the same time, traders are preparing for tomorrow's inflation report, particularly the Consumer Price Index data. CPI reports can cause major volatility in both gold and silver because they influence expectations surrounding Federal Reserve policy. If inflation comes in hotter than expected, metals could continue surging. If inflation cools sharply, we could see volatility in the opposite direction. Either way, tomorrow is shaping up to be a critical moment for the market. Geopolitics also remains a major factor hanging over the market. Recently, there had been optimism surrounding potential easing tensions involving Iran, and that had helped stabilize markets temporarily. But new statements released overnight appear to show that negotiations may not be progressing smoothly. Investors are now worried that tensions in the Middle East could escalate again, potentially disrupting global energy markets and increasing uncertainty across financial systems worldwide. Normally, gold benefits more directly from geopolitical instability, but silver can also attract major flows during periods of uncertainty, especially if investors begin expecting inflationary consequences from energy disruptions. At the center of today's rally, however, are a series of rumors that have taken over social media and financial discussion boards. One rumor suggests the United States government may be preparing to establish a silver price floor after officially designating silver as a critical strategic mineral. According to speculation circulating online, authorities could potentially announce measures designed to stabilize silver prices at much higher levels than current market pricing. Some rumors mention figures ranging from $75 to even $100 per ounce. Now, it is important to emphasize that none of this has been officially confirmed. There has been no formal announcement, no verified policy statement, and no government confirmation of such plans. But markets often move on speculation long before official news becomes public. If large investors believe there is even a possibility that governments could support significantly higher silver prices due to strategic shortages, they may begin aggressively buying ahead of any future announcements. Another rumor spreading rapidly across financial circles involves Gulf Cooperation Council nations such as Saudi Arabia, Kuwait, and the United Arab Emirates. According to speculation, some of these countries may be reducing exposure to U.S. Treasury bonds while increasing purchases of precious metals, particularly silver. If that were true, the implications would be enormous. Large sovereign buyers entering the silver market could dramatically tighten global supply conditions because the physical silver market is much smaller and less liquid than many investors realize. The idea of sovereign wealth funds or governments aggressively buying silver has electrified the market because silver already faces long-term supply constraints. Unlike gold, much of the silver mined each year is consumed industrially. It is used in solar panels, electric vehicles, electronics, medical equipment, military technology, and countless industrial applications. As global electrification accelerates, demand for silver continues to rise. At the same time, mining production has struggled to keep pace. Many analysts point out that silver has experienced supply deficits for years now. In other words, more silver is being consumed annually than is being newly produced. That imbalance cannot continue forever without eventually pushing prices dramatically higher. Some investors believe the market is finally waking up to this reality. For years, silver traded at prices many believed were artificially low relative to its industrial importance and scarcity. Now, with demand rising globally and available supply tightening, the market may finally be repricing silver to reflect those realities. China also remains a huge part of the story. Reports suggest China has been importing record amounts of silver while simultaneously restricting exports. If true, that creates even more pressure on the global supply chain. China's industrial economy consumes enormous quantities of silver, particularly for solar manufacturing and advanced electronics. If China continues accumulating silver aggressively, it could place tremendous strain on already limited global inventories. What makes silver especially fascinating is that it behaves as both a precious metal and an industrial commodity. Gold is primarily driven by monetary fear, central bank buying, and safe haven demand. Silver, on the other hand, benefits not only from monetary uncertainty but also from industrial expansion and technological growth. That dual demand profile can create explosive rallies when both forces align simultaneously. Some analysts now believe the world is entering a phase where silver could become one of the most strategically important resources of the next decade. The global push toward electrification, renewable energy, artificial intelligence infrastructure, and military modernization all require massive quantities of silver. Yet expanding silver mining production is extremely difficult. New mines take years to develop, environmental regulations continue tightening, and many existing mines are already operating near capacity. That is why some investors believe today's move may represent something much bigger than a short-term spike. They argue this could be the early stages of a much larger structural bull market driven by real physical shortages rather than speculation alone. If that turns out to be true, silver prices could continue moving substantially higher over the coming years. Traders are already beginning to talk about $90 silver as the next major target. Technical analysts point out that once silver broke above previous resistance levels near $83, momentum accelerated dramatically. Momentum trading algorithms, institutional buyers, and retail investors all appeared to pile into the market at once, creating the explosive move we are witnessing now. Social media has added fuel to the fire. Financial influencers, commodity traders, and precious metals enthusiasts are all posting charts showing potential breakout patterns and long-term bullish scenarios. Some believe silver could challenge historic highs sooner than anyone expected. Others warn that volatility will remain extremely high and sharp pullbacks are still possible along the way. Even with today's excitement, uncertainty remains everywhere. No one can say with certainty exactly why silver exploded today. The usual explanations do not fully fit. The rumors remain unconfirmed. The economic data does not completely explain the magnitude of the move. But sometimes markets move first and explanations come later. That is often how major bull runs begin. One thing is clear, though. Silver has captured the market's attention again in a major way. Investors who ignored silver for years are suddenly paying attention. Mainstream financial media is beginning to cover the rally. Retail investors are rushing to buy physical silver. Online bullion dealers are reporting surging demand, and traders everywhere are now watching to see whether this breakout has real staying power. If silver continues climbing while gold lags behind, the gold-to-silver ratio could continue collapsing. That would signal further silver outperformance and potentially attract even more speculative money into the sector. On the other hand, if tomorrow's inflation data surprises markets or geopolitical tensions suddenly ease, volatility could become extreme in either direction. Still, many long-term investors believe the bigger picture remains bullish, regardless of short-term fluctuations. They argue that the structural supply-demand imbalance, rising industrial usage, and growing distrust in fiat currencies all support much higher silver prices over time. Whether today's move was triggered by rumors, institutional buying, geopolitical fears, or simply the realization that silver supplies are tightening globally, the result is the same. Silver is suddenly one of the most talked about assets in the financial world. And perhaps the most important takeaway from all of this is that the silver market no longer feels quiet or ignored. Momentum is building again. Excitement is returning. Investors who have waited years for silver to finally break out are beginning to feel vindicated. The bull run appears to be heating up once more, and if current trends continue, this may only be the beginning of a much larger move still ahead.